Welcome. In this video, ZBCN coin is getting ready to take flight. We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand. When we carefully analyze the chart structure, one of the most striking formations we observe is a strong and consistent ascending trend line. This trend line, formed by connecting the low points over time and indicating an upward direction in price, is quite valuable in this regard. In technical analysis, the direction of the trend plays a critical role in determining investor positioning tendencies and the overall market sentiment. The clearly visible uptrend in the current chart shows that the price is maintaining a dominant upward trajectory and that investors are generally optimistic. This structure also provides serious clues about where the price might find support in the future. Especially noteworthy is that this ascending trend line has been tested multiple times in the past, and each time, the price has reacted upward from this level. This tells us that the trend line represents a zone of strong buyer interest in the market, creating a psychological and technical support area. Every time the price has approached this trend line, buyers have stepped in and driven the market upward. In the most recent price movement, a similar scenario has unfolded. Once again, the price touched this uptrend line and received a strong buying response, initiating another upward move. Another important aspect of such ascending trend structures is that they reinforce investor confidence. This line acts almost like a compass, guiding the direction of price. The structure of higher lows at each dip indicates that the market is accepting higher bottoms, and that the overall trend remains intact. In technical analysis, the more frequently a trend line is tested, and the more reliably it holds, the more significant and trustworthy it becomes. In this context, the current ascending trend line is extremely solid and confidence-inspiring. Looking at the latest price movement, we observe that after the most recent touch of this trend line, the price has gained strong upward momentum. This shows that the market still views this trend line as an opportunity zone and that investors continue to take positions at these levels. It is well known that large players and institutional investors approach such trend lines with caution and build their strategies accordingly. Therefore, the fact that the most recent price reaction came precisely from this line once again confirms the validity and impact of the trend. Additionally, such technical structures offer investors not only insight into the current state, but also possible future scenarios. If this ascending trend line continues to hold, we can expect the price to keep rising in parallel with this line in the upcoming period. This provides investors with valuable information regarding both direction and potential entry-exit points. As long as the price remains above this trend line, we can say that market control remains intact and buyers continue to dominate. This indicates that the bullish potential remains strong. Moreover, trend lines do not only serve a technical function, they also create a psychological sense of security for investors. The preservation of these lines reinforces the perception of a buying opportunity among market participants. This perception leads to renewed demand when the price approaches these levels, thereby paving the way for the price to turn upward again. The most recent price movement is a perfect example of this psychological and technical interaction. When the price reached the trend line, buyers stepped in, and the price bounced upward once more. This is an extremely positive development, not only from a technical standpoint, but also in terms of market psychology. But we can't base our analysis solely on trends. Let's also take a look at other metrics. Stay tuned. When we take a general look at the chart, we can clearly see the formation of one of the strongest reversal patterns in technical analysis. The inverse head and shoulders pattern. This pattern typically emerges when downtrends are coming to an end and the market is showing signs of a directional shift. It is considered an encouraging and bullish structure for investors. Based on current price movements, we observe that this powerful pattern is close to completion in the short term. The price is currently forming the final and most critical stage of this setup, the right shoulder. If this shoulder forms properly, a much larger upward move could follow once the pattern is triggered. Inverse head and shoulders patterns consist of three main structures on the chart. First, the left shoulder, then a lower low forming the head, and finally the right shoulder. This setup indicates that bulls are gradually gaining strength within the downtrend and that selling pressure is decreasing. When we look at the current price action, we can see that the left shoulder formed in the past, followed by the creation of the head at a lower price level, and now the price is showing signs of recovery. This recovery indicates that we are in the phase of forming the right shoulder. This stage is crucial because, with the completion of the right shoulder, buyers are expected to enter the market more strongly and push the price upward. For these types of patterns to function effectively, certain technical criteria must be met, and the current price structure meets most of them. Especially when examining volume behavior, we notice that the head section was formed with lower volume during a steep decline, but as we approach the right shoulder, volume shows signs of increasing. This suggests that buyers are regaining strength and that the likelihood of a breakout to higher levels is increasing. One of the strongest aspects of inverse head and shoulders patterns is that their bullish targets are clear and technically measurable. Once this pattern is triggered, the target is typically projected by measuring the depth from the head to the neckline and then applying that distance upward from the breakout point. Looking at the current structure, the head has a clearly defined low, and the neckline can also be drawn precisely. This means that when the pattern is completed, the price target is relatively high, offering significant profit opportunities for investors. Additionally, the area where this pattern is forming has historically acted as a strong support zone, meaning that every time the price has approached this level, buyers have stepped in. These types of technical levels become even more effective when they align with a pattern. Once the right shoulder is completed using this support, and if the neckline is broken to the upside, we may experience a strong bullish momentum. This presents a scenario that boosts investor confidence and feeds into positive market expectations. The current price action can be viewed as a preparation phase. During this stage, investors are positioning themselves, market uncertainty is decreasing, and technical structures are gradually being completed. If the price successfully completes the right shoulder and then breaks the neckline to the upside, that breakout will be a strong buy signal for investors. This signal could completely shift market sentiment and quickly drive the price toward target levels. At this point, it's important to analyze the potential price levels that may emerge if the pattern is successfully completed. Using the distance between the head and the neckline as a guide, the measured move gives an estimate of the potential peak the price may reach after the pattern. Technically, reaching this level would fulfill the classic target of the formation. However, if market conditions are favorable, it's possible for the price to exceed this target. Especially when supported by positive news flow, broad investor interest, and volume, these types of structures can sometimes turn into rallies that surpass their classical targets. When we look at the chart from a general perspective, it is clear that the price movements have recently tightened significantly within the Bollinger Band, meaning that volatility has decreased significantly. Such squeeze phases are characterized as the calm before the storm in the markets. In other words, the price going back and forth in a narrow range may seem uncertain to investors at first, but in terms of technical analysis, these squeezes can be a harbinger of a big move. Indeed, Bollinger Bands are a very sensitive and reliable tool in this regard. A narrowing of the bands signals that the market will soon make a directional breakout. When this breakout is to the upside, it can be a harbinger of a strong uptrend. In the recent situation, the price has been going through a period of severe compression within the Bollinger Bands, with the upper and lower bands getting closer and closer to each other. Such band squeezes indicate that the market is in the decision phase. There is a short-term equilibrium between buyers and sellers, but this equilibrium cannot last for long. The longer this squeeze lasts, the harder and more decisive the subsequent move may be. And at the moment, it is a very positive development to see that this movement has started on the upside. To see the squeezes, we need to follow the Bollinger Band. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.